welcome to this week's MFB News. Hope you've all had an absolutely cracking week and life is being very, very kind to you. We are at that point in the year when I'm recording MFB News, when it's still dark outside, so we can safely say we're now going into autumn. What we've got for you today, we're going to be going through the latest update on lender pricing and criteria changes. We're going to talk about house prices and what's going on there. We're going to touch on the Renters' Rights Bill, and then we're going to talk about base rate and the impending meeting, which is happening tomorrow. So lots of interesting stuff for you guys this week. Okay, so first up, let's have a quick nosy at what's been happening with those swap rates. So 2-year swaps as of 10:45 on Tuesday evening. 3.7% 1 month ago, just under 4.1, and 1 year ago 5.2%. So as we can see, the general direction of travel is still downwards, but it's very, very slow. I think I used the terminology once that it's going to be an evolution, not a revolution. That's holding true. Now in terms of 5 years, we're at 3.37 on 5 years. 1 month ago 3.65, and 1 year ago 4.55%. So again, downward travel, but actually just sort of very, very slowly. Now, in terms of how that's impacting mortgage rates, because swaps have stepped down a bit since in the last week, we have seen another wave of reductions, not insignificant from some lenders, but actually sort of broadly speaking, you're going to notice a theme here in terms of where the rates are largely coming down. So what have we had? We've had Landbay bring their rates down by 0.2%. Now, Landbay are a specialist lender. So they can do really straightforward stuff. When I say specialist lender, I think people assume that means that lender can't do anything normal. They can do normal transactions. So they can lend to individuals on straightforward properties where the applicant has less than 10 buy-to-lets in the background. But to be honest with you, if you're in that situation, you probably wouldn't want to pay Landbay pricing. You probably go to one of the high street banks. They can also lend to limited companies, trading companies, layered companies, day one remortgages, HMOs, multi-units, all that kind of stuff. So that's why we call them a specialist lender. We've seen HSBC come down by also 0.2%. I don't really talk about HSBC. I don't really see them as a very landlord-friendly lender. They're a good lender, obviously, one of the world's largest banks, probably the world's largest bank. You know, their offering is very, very good. The pricing is there or thereabouts. They only really came into the buy-to-let market in the last couple of years. And it's very much a case of we do homeowner mortgages and a little bit of buy-to-let. It's really not their strength at all. But actually, if you can access their rates, they're very, very competitive. I would say at the moment, in terms of the very vanilla part of the market. So I'm a landlord with a property in my own name. I only have 1 or 2 buy-to-lets and a really healthy income away from rental, and I'm looking for you to lend this really standard property, which actually does scoop up a large number of you. HSBC could certainly be an option. Now, Barclays have come down by 0.4, huge. They haven't repriced in absolutely ages, so don't read into that. It's just that they're kind of catching up. Barclays, I would kind of lump them in with HSBC in terms of their position in the market and the kinds of landlords they're looking to lend to. Leeds down by 0.16%. Foundation Home Loans down by 0.2%. Keystone by 0.25%. TML have come down by 0.15%. And Aldermore have launched some new limited edition rates, which start from 4.59% with a 5% fee and 5.59% with no fee. Now, from that, you'll be able to tell that Aldermore are indeed a specialist lender. And in comparison to their previous limited edition rates, these have come down by 0.1%, so a small step down there. Now, an interesting one, Interbay have reduced their rates by up to 1% and also lowered their arrangement fees. Now, Interbay are definitely a specialist lender. They're more of a commercial lender, but also do the more kind of racy buy-to-let lending. So think of limited companies which are potentially offshore, or there's a kind of trust element, large HMOs, large blocks of flats. So the kinds of properties which wouldn't kind of fit in with a traditional buy-to-let lender. They also do semi-commercial, investment owner-occupier and commercial investment and commercial owner-occupier, and bridging as well. So the fact their rates have come down by 0.1%, and commercial lending is really, really expensive. So in terms of commercial lending, actually, just to touch on this, for those of you who are either in that space or thinking about getting into that space, there's lots of good reasons to get into commercial, particularly semi-commercial. At the moment, the high street lenders have very, very little appetite to be in that space. So realistically, for 90% of borrowers, you're going to be looking at more of the sort of challenger bank type lenders. So your Aldermore, Shawbrooks, Interbays, those kinds of lenders. And so in terms of pricing, it is quite expensive at the moment. So one of my clients emailed me yesterday. He's got a commercial property, so no residential parts, looking to raise a mortgage at 75% loan to value and the kind of rates you're looking at are in the 7s at the moment. So when we see a commercial lender bring their pricing down, it is fantastic news because the pricing in that space is still very, very high. And lastly, in terms of lender changes, Paragon have added products with cashback. So now in some of their mortgage products, they're offering £750 cashback, which actually is really nice because what they do is they say it's a free valuation and £750 cashback, which means that actually in terms of covering your legal costs or a large chunk of your legal costs, actually that would kind of obviate those fees. So that's really nice to see as well. So I think in terms of the week as a whole, very, very positive. We are seeing swap rates easing down slightly. We've got the inflation news. So I'm so early this morning, it's 6:30 in the morning. The BBC can't keep up with me. They haven't released the news about the inflation data yet. But we'll come on to that in a moment. But also we've got the base rate news as well. So actually things may see a slightly more dramatic change in the next week, and they may not. It's really just going to depend on what the data tells us. But as I've said before, actually at the moment, things are just kind of ticking over in the right direction, and that is really fantastic news. Okay, now for those of you who are thinking about buying a property in the coming months, this one is for you. So the average price of property coming to the market for sale has risen by 0.8% to £370,759, double the long-term average for this time of year, and this is according to the latest Rightmove figures. Now, Rightmove say the rise in prices beyond the usual seasonal norm has been driven by strong recovery in activity this summer when compared and with much more subdued market at this time in 2023. I did go on to say that traditionally busier autumn market has arrived earlier than usual, with many buyers and sellers spotting a window of opportunity to act, and that's the kind of shot across the bow for you guys who are thinking about investing. Mortgage rates are trending downwards, as we know. There's more property choice for buyers, and earnings now rising faster than both inflation and house price growth, which are all contributing to better conditions for moving. However, despite some strong headline figures this month, Rightmove notes that beneath the surface, the market remains cautious, with pricing right still key for successful sales. The timing of a second bank base rate cut and which segments of the market could be affected by the announcement in October's autumn statement are creating uncertainties ahead. So I think the kind of message here is that actually they are feeling optimistic. House prices are certainly increasing more than they would at this time of year, but actually there is still an underlying nervousness in the market. Things are still quite delicate. Now, this is the interesting bit. The number of sales being agreed between buyers and sellers, is up by 27% compared to this time in 2023. Doesn't come as a huge shock because actually no one was really buying any houses in 23, which is a strong rebound compared with last year's more subdued market. In positive signs for future sales, the number of potential buyers contacting agents is also up by 15% compared to this time last year. Buyer choice has been improving, and the average number of available homes for sale per estate agency branch is at its highest since 2014, with 33 properties available per estate agency branch. This has come from a 14% increase in new properties coming to the market for sale compared with last year, but there still is not a glut of homes for sale, as this figure is only up by 3% when compared with the more normal pre-pandemic 2019 market. So I think the message here is that if you are thinking about buying a property, the expectation is that house prices are just going in one direction. I suppose conversely, if you're thinking about selling, there's food for thought here as well, isn't there? And I know there are landlords out there who are kind of weighing up their options at the moment. So I feel like actually, if you're thinking about selling your property, what I read here is that if you price competitively, actually the property probably should sell. In terms of timings of that, and just to read this part of the report out, the average property is still taking 60 days to find a buyer, which is 3 days longer than this time last year, even with better market conditions. So if you are thinking about selling, particularly if you're thinking about selling before the autumn statement, just be aware that 60 days is kind of your time to sell. So you need to price really competitively to get that over the line in time and get it sold super quick. But yeah, so I think realistically what we can kind of deduce from this is that house prices are increasing. For those people who are thinking about buying, it's go, go, go now, because otherwise you're going to kind of miss out. And for those people who are thinking about selling, realistically, you're not going to get anything sold in time for the autumn statement. The reality is, if they're going to increase capital gains tax, there's every chance it will happen at midnight on the 30th of October. They're not going to hold it over till April next year. So actually you probably kind of missed that window. So actually sitting on the property, waiting for it to increase in value may go some way to mitigating some of that extra capital gains tax that you may well end up paying. Okay, now the Renters' Rights Bill has been presented to Parliament in the last week, and some of it was as expected, and I think there are a couple of bits in there that I personally was slightly surprised about. So let's just go through what's contained in there. So first of all, the abolishment of Section 21, so what they call no-fault evictions for new and existing tenancies. It's going to be in the bill, which is no great surprises, and they're also going to end the blanket bans for those on benefits or with children, which again we've been expecting. It was also contained in the Renters Reform Bill with the Conservatives. You know, no great news there. Now, an announcement from the Ministry of Housing, Communities and Local Government said the bill would extend Awab's law into the private rented sector, letting tenants challenge dangerous conditions, and it will also apply the Decent Home Standard for rentals. So I think, you know, realistically, I don't suspect that anyone who's watching this video deliberately lets out a property which would be classed as dangerous. So whilst having these things put in law will always make people feel slightly more nervous, fundamentally, you know, we're all good landlords just trying to run a really good business and, you know, provide nice homes for our tenants. This shouldn't concern us. Now, landlords will not be able to include mid-tenancy increases in contracts and would only be able to raise rents once a year and to the market rate. The update also confirmed a ban on rental bidding wars. So essentially landlords and letting agents will be legally required to publish an asking rent for their property. They're going to be then banned from asking for, encouraging or accepting any bids above this price. So essentially all that's going to happen is that landlords are going to list properties for rent for a higher price than they would have done either way anyway. So actually no one's really been protected here. But there you go. Lastly, the announcement said a new private rented sector database will also be created to help landlords understand their obligations for compliance and provide tenants the information they need to make informed choices for new tenancies. Now again, this was also under a slightly different name going to be contained in the Renters Reform Bill. And I think that, you know, from just talking about it in its previous incarnation with our landlord clients, no one was particularly worried about this. Essentially, it's just making public data in terms of, you know, the sort of background on the landlord and also the property. So generally speaking, I think people were kind of quite relaxed about this one. But again, as always, the devil is in the detail. So I think really in terms of where we go from here, so obviously we've got a process to go through. Labour should find it relatively easy to get this bill passed because they have such a majority in Parliament at the moment, but hopefully there will be some amendments. I think what we're missing in here is the kind of trade-offs. If you abolish Section 21, what are we doing instead? But again, we don't have all of the detail yet, so let's just wait and see what comes up in the next few months. Now tomorrow, Thursday, is base rate decision day, and I think I'm acting quite happy about this because there has been obviously a period of time when I've absolutely dreaded this. So in fact, the prediction of rates staying the same this time around is actually quite welcome. Now, reading reports on where the city is kind of expecting, or what's the city expecting to happen, basically people are saying it's pretty much a done deal. The traders are essentially pricing in that base rate will stay at 5% this time around. There is still a cut penciled in or expected in November's meeting of 0.25%, but for this one we're expecting things to stay at 5%. However, just to note, the bank cut base rate last month, which was a little bit unexpected for some, me included, but policymakers have signalled they'll take a cautious approach in the months ahead. There are a few unknowns actually in Thursday's decision making. August inflation reading is due out today, so we haven't got that information just yet, as I explained earlier on. But actually, if the numbers come in particularly low, it could be that actually it kind of changes the argument for a base rate reduction now. Now, the headline rate of inflation, as I'm recording this, is expected to remain at 2.2%. But actually, like I say, if the figures did come in meaningfully below this, and I don't just mean 2.1%, but actually significantly lower, then that could change the argument. Now, another thing, there was a chap called Jonathan Haskell, who is one of the MPC committee members, and he was what they would call more hawkish, so essentially kind of, I would use the word cautious, conservative, you know, you can kind of read into that. And he's left the rate setting body, and he's been replaced by someone called Adam Taylor. Now, it's not quite clear what Taylor's stance is on rates, but he could easily be more dovish, so slightly more kind of pro rates coming down than Haskell. So actually, as I'm sitting here recording this, while there is a strong expectation of base rate staying at 5% tomorrow, actually, if we get really strong or much reduced inflation figures, and actually Alan Taylor is feeling particularly bullish, then we could find that actually things change shape and we see a reduction nonetheless. But just to recap, on the market's predictions for base rate going forwards. One more drop by the end of this year, and then 2 or 3 drops into 2025. And there you go, that's us wrapping it up for this week. I do apologise, I feel like we're not covering off a lot of kind of mortgage stuff at the moment. What we're covering off is the things that sit around the edges in terms of being a landlord, and also mortgage pricing. So for example, the base rate stuff, the inflation data, all those kinds of things. But this stuff is all really, really important in terms of linking into pricing. But I am quite conscious that we probably need to get a bit more into the detail of actually, you know, the mortgage side of things. We'll try and bring our focus back to that a bit more next week. So if you have any questions, you know, you can give us a call at 345-345-6788. If you go on our website, actually, as well as being absolutely full of really, really good information, you can go on there and you can make an inquiry online. So you can email us via there. It provides all our contact details, but also there's an online web chat. So you can go on, and I promise you don't get through to a robot. But if you're really unlucky, you might even get through to me. But that's available from 8:30 to 5:30, so you can come and have a little online chat if that's your preferred method of contact. Have a fantastic week. Do look after yourselves, and I'll see you again next Wednesday.